Hello everyone, welcome to my YouTube channel. Today we are going to learn about debt and equity, their meaning and differences in the context of financial instruments. See, debt and equity both may have a different meaning in different context, but we will only look into their meaning and differences in the context of financial instrument. So, debt and equity both are financial instrument and these are assets. But before directly learning about debt and equity, let's let's learn about assets briefly. Here I have given the assets and their types. I have divided here into tangible and intangible assets. So assets means basically a thing or anything that provides future benefit. Anything can be assets if it's provide future benefits to it. Future means benefits means profit, revenue. This can be future benefits for a corporation. So basically assets are divided into two terms, tangible assets and intangible assets. So tangible assets are those assets which can be touched and feel. Any assets which can be feel and touched means which we can see. Suppose an furniture and suppose a furniture, a plant, a machinery. These are tangible assets. And other is intangible assets which can not be seen and touched. So let's say example goodwill. So goodwill basically a reputation of a business. So we can see or touch goodwill, but it brings a lot of revenue or profit for the corporation. So it's basically assets, but it is cannot see and touch. So it is tangible assets. So equity and debt, which we are going to learn, are types of financial assets or instruments, which are a type of intangible assets. So financial assets or instruments are a type of intangible assets, and equity and debt are types of financial assets and instruments. So first we'll learn about debt and we will come into equity. So I have written here, it's just for a note. Basically we just gonna read it and we'll explain it to you. So debt is a contract on the basis of which issuer must pay fixed interest. So forget about this. Debt is basically a loan. You know about loan. So a banks provide loan or anything that have money provides loan. So if I want some loan from a bank, so what I do? We go to bank and ask the manager or anyone that I need a loan. So what bank will do? Bank will ask about see my financial stability, see whether I have financial stability or not, because whether I can return the debt or not. So basically bank will write a contract where it will be stated that there would be some fixtures. So debt is basically a loan on the against of which there are some fixed interest which the issuer have which the holder have to pay to the issuer. So let's understand it by example. So suppose a company issues some bond is a type of debt like call note, other types of debt. So bond is a type of debt. So a company issues some debt and I buy it. So basically I am giving some money to the corporation. Basically I am giving some loan to the corporation, and against of that loan the corporation is going to pay me some fixed interest annually, monthly, according to the contract. Okay, so debt is basically a loan against of which the issuer have to pay a fixed interest to the holder and return the amount of debt after a certain period. So suppose I buy some debt from a company, and according to the contract the company have to pay me some fixed interest and also the amount of debt after a certain period. So let's say 10-15 years. So debt is a fixed income instrument. Why? Because from a debt I cannot earn more than a fixed amount of money. The earnings that I am going to earn from a debt is fixed, is going to be fixed, and that will be written on the contract. So I hope you have understood. So let's go into equity. So here also equity also have some different meanings in different contexts, but we are going to learn in the context of financial instrument. So equity means a part of a company ownership. So let's say there is a formula in equation, what we call the accounting equation, that is assets equal to liabilities plus equity. So equity equal to assets minus liabilities. Okay. So equity is nothing but what it remains after paying what it remains from the assets after paying the liabilities, and that equity will be divided into many parts, divided into many parts, and each part will be called equity share. So let's understand it from example. Suppose Reliance Industries issues some equity shares and I buy it. Okay, so I'll be the owner of some part of the Reliance Industries. So if I buy equity share, that means I'm buying the ownership of that company. Okay, so so here we have understood that against of debt the company have to pay some fixed interest. In the same way, the equity in the same way the corporation have to pay me some dividends against of equity shares only if there is any profit remains after paying the debt. Okay, so suppose a company earns some money, so money earns some profit. The profit will be asset for the company, and it will use that assets for paying the liabilities, that is debt, and the remaining will be equity, and it will be divided to equity shareholders as dividends. I hope you have understood. If you are not, then you will understand it here. Here I have written the difference between equity and debt, so we can understand understand these both things in a better way. So we have written here difference equity and debt. Here I have written debt. So in case of debt, the interest is fixed. So if I buy some debt from a company, the amount of interest that the company will going to pay me in future will be fixed. Suppose 10% debentures. You may have heard about it. 10% debentures means the interest will be 10% of the amount of debenture. Suppose a debenture rupees a face value of a debenture is 100, and if face value of a 10% debenture is 100, so the interest will be 10%, that is 10 rupees. But in case of dividend, that is not fixed. If the profit is more, then the dividend is more, and if the profit is less, there is less dividend. If the profit doesn't remain after doesn't remain after paying the liability, then it will be not paid to equity shareholders. That means dividend is not paid. If there is that means dividend is not paid if there is no profit, or there is no profit remains to pay the dividend. Here is the second point. Debt holder are just creditor of the company. If I buy some debt, so I will be just the creditor of that company. But if I buy equity shareholders, I will be the owner of some part of that company. So here's the third point. In case of bankruptcy, so bankruptcy is basically a situation where the company will not be able to handle its debt because of debt. Means the losses are so high that the company doesn't handle it, and the management decided it to close the company. So in case of bankruptcy, investor in debt instrument have priority over the claim. Means even if there is bankruptcy, the company have to pay the debt holders their money back anyhow possible. But if there is bankruptcy, the equity shareholders may not get their money back. So here is the last point. Interest payments made on debt instruments are tax deductible. So this is a little bit hard thing to understand if you don't know about taxes and what is tax deductible thing. So let's understand it by example. Suppose there is the company whose profit for a year is 100 rupees. Okay, here the company took some loan and took some loan and it have to pay interest 10 rupees per year. So I have written here, if the profit is 100 rupees and 10 is the interest that it have to pay against the debt it took. So how much it remains? 100 rupees is profit, 10 rupees is interest, and remains 90 rupees. So if tax is 10%, then it will be rupees 9. Have you understood? The tax percentage is imposed on the amount that remains after paying the debt. Okay, so it is tax deductible. The more will be debt, the more will be the interest, and more will be the tax savings. Okay, but in case of dividend, payment on equities are not tax deductible. So let's hope you have understood. If you have not understood any points, feel free to write it on comment section or dislike the video. If you dislike the video, you will know that you have not understood some part. But if you have liked the video, then please subscribe or and